Welcome back everyone to my YouTube channel. So yeah, I'm continuing my daily journal. As uh, as you all know, yesterday I started a new book, The Warren Buffett Way. I don't know if I said it, but that's the name of the book. So I started it, making it my 10th book of the year. And yeah, my goal is still to read 30 financial book the first 6 months of 2026 to front load as much as knowledge as I can about the financial industry and to give myself an advantage and possibly, not possibly, with the intentions to break my unprofitable habits in trading and start moving with profitable habits that will make me accomplish my goals of earning 1,000, $10,000, $100,000 and $1 million from trading. That's my goal, but taking it as slow as possible. And for the month of February, unlike January, which I constantly blew my account because I wasn't able to follow my strategy and I wasn't able to keep myself within the boundary, which is really my account motto. I think I blew my account more than 4 times in the month of January. So February has been a month in which I grounded myself. Although there have been scenarios in which I took risky moves, like the time I went in with 0.08 loss size on a position because I was trying to close the week green. So yeah, apart from that position, I think the other one have been fairly like there was one that I risked 50% of my account, but that one was like calculated risks. But that one was like I was using over 80% of my account. The one was 0.08, which was not supposed to happen. So yeah. I think apart from those two scenarios, I've tried as much as possible to follow my risk management strategy, and it's been well for me. Although this same month, I'd had two scenarios in which I was not able. 2 weeks so far, like last week and I think was it last upper week. So those no, the last week and the first week of February, I didn't follow my strategy as well as I should, but I was not as I would say I was not like unfortunate as in January, which it really took my account to zero. So yeah, for the month of February, I think, regardless of how my current trade goes, which I'll go into later, I've been I've closed in profits. I started the month with $4.8, which you should all be seeing right now because that's my first trade of the month. Then I'm closing it above $50 if this my current trade has nothing to say about it. Actually $51.8 before I open this trade. So yeah, profit I think I went over that's over 20x, right, in over investment. 20, no. Close like I think 10 or 12. No, it should be around 12x because if it was $5, that would be like $50, which should be around 10x, which will round up to about 1,000 profit. So I grew my account by 1,000 profits. Let me just say my account grew by over 1,000 in profit for the month of February. And yeah, my goal is still to hold myself accountable every day, not to make sure I am within the bound of my strategy and not overdo. I think the main takeaway for me for this month is that I can see the market as clearly as day and night, but there's a bit of latency in my brain and my action because that was what happened yesterday with pound CHF. Both time in which I took the long and short position, I saw that I should have. I saw that the market was telling me to close and reconsider my position. The first was the short I took, which was telling me to close that it will likely go upward. And the second one, when I took the long, they were telling me, okay, they are still rejecting this upside. Though there's still a high probability that I will continue with my original prediction, which is that we'll go for a downtrend. And the worst part about all this was that today I had a short entry on pound CHF, like those 15 pips for 60 pips profit, and I kind of chickened out. I was not able to take the trade. And between it was like a single 4 hour candlestick went for my entry to take profit. I was just beware that when I saw that said like what stop I don't like I can bring up excuses, but I don't know why I didn't take it sincerely. The risk was not much. It was $9 risk. I did not take it for $40 profit. I was just like, I just shook my head. So I think that's me not taking the trade just made me take the next position, which is Audi JPY. So Audi JPY right now is my part of my next week trade, meaning I've already taken because it's a loophole in my strategy that allows me to take a trade on Friday that can be pushed to next week. So which means that if this trade takes me out in loss, I have to trade for next week. If you take me out in profit, I have to trade for next week. And if you take me out in break even, I will have three trade for next week. So yeah, I'm just focusing more on my trading aspect today because I've not actually read much of the Warren Buffett's way yet. I'm still kind of the beginning introductory page, and it's about his life. And since I've already read the Snowball Effect, which was about the life of Warren Buffett, I feel like let me just go into more of my trading review for the week and for the month and how I intend to better myself for the upcoming months. Because if I can repeat this same level of discipline with more of the discipline and less of the risk taking that I took, I'll be well off for the month of March. But it's up to me to really grind myself, to really put that stamp that this is how I'm going to approach the market going forward. And yeah, I feel like it is very possible for me to break that $500 and possibly break my all-time portfolio high of $2,000, which I set my first year of trading, and since then I've not been able to go back to that high. So yeah, that's my goal right now, to trade softly, to take it step by step, to adhere to my risk management plan. Because the only reason why yesterday, despite me not closing the position early, that I was still able to maintain, but because I adhered to my risk management plan, I was not like, oh no, this position was, I know I adhered to it strictly, so which led me to be in a good position despite losing back-to-back trade. So that's a lesson for me too, that risk management really works for my strategy, because my strategy is very, very aggressive in terms of taking the winners and like taking my portfolio and out maximizing the profit that it can bring out. And it also reduces my risks in the sense that with every loss I take, my risk keep reducing. Like I don't maintain the same risk for like two trades. If I lose a trade, my second trade will have a reduced risk because my loss size will be reduced to maintain the 100 pips portfolio size that I am working in on. So yeah, the month of February has really been good trading wise. Like book too, like I did not expect to reach 6 books for the month of February because of my new routine and the whole lot of things I got myself into. But I was still able to complete 3 books, and now I'm on my fourth book, The Warren Buffett Way. So meaning I've currently on like I'm reading. I'm currently like reading that. Let's say I've read like 10 books for the first 2 months of February. Meaning I can still keep in yeah, still keep my 6 month target on. But there's a book, The Security Analysis, that has over 800 pages. That book I'll have to make sure it does not take me 2 weeks to finish it. I'll have to give it my all, study it well, because it's the foundation of the Intelligent Investor by Graham, Warren Buffett, idol, I think, model for investing, like the person that he looked up to as how to better invest in the stock market. So I have to really pay attention to that book and make sure I absorb it, because there are some things I still don't know how to really calculate well in the markets, but I have a general idea on how to use them. So I think that book will break it down for me, and I'm willing to learn it very well. Like what EPS, how to actually calculate them, the price and earning ratio. Do I know what they mean? But I don't actually know how to calculate it. I'm not trying to rush process, because I know the main thing just to understand the information I'm getting and transfer possible to make sure it's correlating with what's happening in the real world. Not correlating in the real world, I mean there's an arbitrary opportunity there, either for the good side or for the bad side, meaning for a long position or for a short position. But me, I will be, when I enter into stock market, going as a holder for good companies that are going to do well for the next 5 to 10 years, and the fundamentals, as long as they remain strong, I'll keep on holding the company. Just like what the Dahoo investor say of holding a company for not more than 3 years, as long as the fundamental is alright, you should be able to start ticking to the upside. So that's the philosophy I tend to use. I'm just doing all the because I don't want to trade forex. I don't want to be trading constantly. I want to enter into the investor. And for me to go into the investor, I need to have my own is to have a good chunk of money so that I can do that with an ease, like for sense. And I feel like the foundation I'm building with forex will make me more of a savage in terms of being able to exit the market when I see the chart as clear as day. And when I'm able to receive the information of how the fundamentals are changing, I'm able to correlate it with the chart and make the best decision possible. So yeah, I can go, I can talk more about this month, but I think that does it for my review of the month of February and how I have tackled trading for this month so far. And yeah, thank you all for listening. I'll see you all tomorrow. Bye bye.